Welcome to A Few Minutes with Peter Grandich. I'm your host, Al O'Grady, and for the next few minutes, we'll be talking to Peter, getting his insights on the markets, commodities, business, politics, sports, and life in general. Now, Peter Grandich is the editor of the Grandich Letter, which was first published back in 1984. He has been a market strategist, a portfolio manager of 4 hedge funds, a mutual fund that bared his name, and is widely known for his accurate forecasts and his no-hedge market perspective. He appears regularly on television and radio and is widely quoted in leading financial publications. He's also the co-founder and managing member of Trinity Financial Sports and Entertainment Management Company, an insurance and estate planning firm specializing in servicing professional athletes and entertainers. Peter, as always, welcome back to the program.
Good to be back, I think.
You think? You had to think about that one.
Yeah, it's a funny thing, Al, before we get going. You always get emails. I mean, I forgot how many tens of thousands of people read the blog, and you always get emails each day. And many times I don't even see them. My assistants see them, and they don't even get it to me. But she has been off the last couple of days, so I've been reading them, and I can always tell where a market is based on what the emails and how severe the market move is based on how off some of the emails are. And I just got done reading one of the, perhaps in all the years, not so much the nastiest email, but the absolute can't figure out how this person came to that conclusion based on their email. So you have to forgive me. It was just, I was reading and I was saying, is that person actually reading the blog, or is it somehow being translated and he's seeing something different than I wrote? But that's okay.
Is there something that you can share with the rest of us about that, or is it pretty much a private thing?
Look, I think, I make it abundantly clear where I'm coming from. There's no surprises what I do, what my biases and prejudices are, and so forth. And I don't ever think, that despite the nice things you say at the beginning of the outset, that I ever come across as somebody that never misses and walks on water, et cetera, et cetera. I talk more about perhaps mistakes and errors than most other colleagues I ever met in my life. But this particular party focused on just one aspect of something and has missed everything else that was right about, but doesn't seem to remember that. It's kind of like a wife. They kind of only focus on the bad things you do, Al. You know what I mean?
Yeah, I know exactly what you mean. I've been married for 25 years. Of course I know what you mean, Peter.
All right, so that's where I was at. I got wife email, okay? So we'll move on.
There we go. Peter, as always, we always talk about the U.S. stock market, and I guess today will be no different. In our last discussion, you were talking about a yellow warning. So what's the latest with that?
That's a good thing to start off with, to kind of understand where I'm at. I think a much bigger picture explains it. In late 2007, I believe the market entered a primary bear market. Now, most people don't think, in fact, no one really seems to think we're in a bear market. I believe that primary bear market would have an incredible rally, which we had, and even as of late last year, started to believe it could even itch out and possibly touch marginal new all-time highs. But that would be in the context of a secular bear market, and we're having a tremendous counter-trend rally. I still believe that. I don't believe this is a bull market in the context that for the next 3, 5, or 10 years further, the economy and most companies will do well. So with that in mind, my feeling was when we last spoke, that where the market was and where it could still go, which includes still eking out that marginal new high, I would want to be, if people were thinking like me, I would want to be selling into that general equities, not first building a big position, which seemingly people are doing now, even buying things like Apple for the first time at above $600. So that yellow flash is just not that I expect the market to reverse and go back down. It can even eke out another 10% gain, but this is a time frame this year where come by the end of the year and after, no matter who's elected and the hoopla for the first few weeks and months or whoever's in there, by this time, certainly next year, even perhaps, and I'm not there yet, so I don't want anybody to go crazy, but even maybe be taking something out of the metals market, and we'll talk about that later. So this yellow is just a cautionary concern of mine for long term in case there's still anybody that looks past their nose and actually cares to invest for the next 2, 5, or 10 years.
I don't want to put words in your mouth, but are you saying maybe do some profit taking? Take
if
a
you
few
had
things.
them, definitely. I mean, if you've been good enough, I got bullish literally the day the market bottomed or the day after the market bottom in 2009. I didn't share in everything up, but I'm certainly if there's still people and they have large scale gains, I think what you want to use the next 6 to 12 months on any further gains is to be a scale up seller, which means as we move up, you set a certain amount that you're going to take profits in. So if we do get fortunate and get to a new high, by that time, cash is your single largest holding.
Right. Okay. We talk an awful lot about the U.S. stock market. Sometimes we'll even talk about, in my country, the TSX here in Canada. But hardly ever do we really talk about stock markets around the world. So having said that, any thoughts?
I would say that neutral for most. But again, and I've probably said this before, so sorry for repeating myself, but one of the mistakes I continue to see both in the U.S. and to some extent among Canadian investors whenever I'm at shows and they share or talk about their portfolios, most of their equity holdings not related to metals or resources are in companies' primary businesses in North America or the U.S. And why I think that's a mistake is that the U.S. is no longer the economic engine that pulls the world around. I continue to believe, despite a correction at this time, in the next several years, more growth will come from China and India or even places like Brazil than it will come out of the United States. And yet most general equity portfolios, certainly by individuals at least, are overwhelmingly still just in U.S.-based companies. So I suggest to people that if they are going to continue to hold general equity positions, that they have as much exposure, if not more, to investments outside the United States than inside.
Okay, any sort of proportion, any sort of percentage?
No, that's all. All that stuff. All that's cookie cutter stuff, and 15% this, 20% that. No two people are alike, and no two portfolios should be exactly alike. But I do think that if you find yourself nil or next to nil with foreign ownership, and yet you're going to continue to hold a general equity portfolio, then I think that could turn out to be not a great choice, whereas I would err on outside the United States than inside it.
Fair enough. Let's move on from stocks to bonds. You've been saying that U.S. bonds would be the worst investment for the next decade. The long bond rate has risen sharply. I guess that's good news for you, but is it bad news that you never got to actually short bonds?
Well, one of the things, Al, I've learned in almost 30 years is sometimes it's not so much what you do, but you don't do that keeps your head above water. And one of the things I continued to emphasize was that I just thought that with the 10-year below 2%, buying bonds at that point in time was just going to be a real bad investment and actually the worst investment people can make when they look out 5 or 10 years from now. The fact that I haven't shorted it and actually took advantage of such a move, well, you can't do everything. I'm glad that I certainly personally wouldn't hold and don't hold anything of any maturity out past a year. And I don't want to skip things, but even, again, most of my cash and paper dollars is in Canadian dollars, not U.S. dollars. So certainly don't want to be in U.S. bonds and didn't want to be on a 10-year bond with a 2% yield, knowing inflation is at least twice than that, no matter what the government tells me. And over the long term, I would lose a tremendous amount of purchasing power by holding such an instrument. Okay.
You had mentioned Canadian dollars, U.S. dollars, so let's continue that about the U.S. dollar, at least from that perspective. Peter, some reports are stating that the percentage of bulls on the U.S. dollar is the highest that it's been since 1999. Does that concern you in any way, shape, or form that maybe it's not terminally ill, as you've been calling it?
Dr. Grandich thinks that, no. I still believe the patient is terminally ill. And quite frankly, the fact that it is true, there are more bulls on the U.S. dollar now than there has been any time since 1999, and that comes from the commitment of traders in the commodity pits, really goes to say, okay, with all that turn to bullishness, where has the U.S. dollar index gone? I mean, where has the dollar gone? I mean, Europe was supposedly falling apart up to a couple of weeks ago, and yet with all that bullishness, they've not been able to the euro lower. So the question I think that really should be asked is not about all the bulls that are out there, but if they've all made their committed to the long side, who's left to keep committing it? So I actually take that as a bearish indicator, and again, believe that over time, one of the worst currencies to own will be the U.S. dollar. So no, it bodes well. It doesn't help public opinion because you're out there not in the large percentage group, but I feel comfortable knowing that if all those people committed to the long side and we've gone nowhere as fast, then their commitment has run out of power.
But there's a basic follow-up to that, Peter. If that's true, that the percentage of bulls on the U.S. dollar is the highest that it's been since 1999, my question is why?
Well, you might want to try to find one and get them on because I'm not one.
Okay.
But if you said to me, okay, plays devil's advocate, what would you be bullish for? Well, interest rate differentials, that somehow they believe rates in the U.S. are going to go up much higher than rates elsewhere, and therefore there'll be a flow. Two, they believe in U.S. financial assets in general, that they're better than, say, Canadian, and I certainly don't think so. I've done that with my own finances. I feel much comfortable sitting in a Canadian finance institution in Canadian dollars, which, by the way, in case anybody is interested, there are now 2 reports, because I just did my taxes, that we have to do and fill out, both for the Treasury and the IRS, noting it, the account number, the amounts, and so forth. And I'm glad to be that way. So I guess they think, and they've seen the news is euro and then the euro blowing up, but the Europe is it's $1.32, and I heard all sorts of forecasts of parity for months now, and it's not going that way. And eventually, just like in anything else, just like a boxer that's supposed to dominate, and all of a sudden it's the 12th round and the underdog is still in there, that all that momentum wanes, and then they become what we call stale longs, and they look for the exit. So the surprise, I believe, in the coming months is not going to be a bump up in the dollar, but a bump down.
Okay, fair enough. Peter, I know it's safe to say that of all the market forecasts that you do make, you're certainly bang on when it comes to gold. A lot of people certainly take stock, no pun intended, in what you have to say about gold. But, like the old saying, no one's perfect, not even you, Mr. Grandich. So when it comes to gold, is it possible that you could be missing a major top in the yellow metal?
How dare you, Al?
I know.
How dare you? No, that's a good point. And believe me, based on recent days and including that last email, I'm certain, there are people out there saying eventually, everybody's wrong and this time Grandich is. But again, I take comfort. And what really has amazed me in the last week or so is some of the most ardent bulls, and not just independent bulls, but bulls who I know make their living selling gold and gold coins and mining companies, even they are talking bearish. And again, as a contrarian by heart, but also knowing that the amount of hate that always exists for gold and the wall of worry that the gold market has climbed for the last 10 years, I take comfort in it. And as I put up in the last week, and nothing's changed. I showed a point and figure chart that says gold still remains in a long uptrend. As it's even more bearishness now than we had in late 2011. Yet gold is over $100 higher than it was then. Again, this is talk. I hate to say it, but talk is cheap. But through this whole mother of all bull markets, it's always been the bulls who have to defend themselves anytime we're not anywhere near the all-time high, and not the bears who are constantly wrong, and this time is no different. So can it cave? Have I missed something? Is something changing? Look, we just had Bernanke out today, literally, no pun intended, panning gold. He gave a talk at a university, and he just tore apart any thoughts of a gold standard and gold in general. And Ron Paul was right when he had him there a couple weeks ago. This man does not believe in that and is just a lover of paper money. But that's good, because those of us who know inevitably where we're leading to and where we're going, we live through these corrections, and when they're over, and they may correct even lower before it's over, we will be talking when it's $2,000 plus an ounce, I will just remind everybody the countless corrections we went through, all the calls that said it was over, and you try finding and punch that in Google. Try finding me a bullish gold article in the last couple weeks, and watch all the articles from all different sectors of finance and journalists and people who never talk about it that are just literally panning it all over the place. And so I know we're getting near a washout area because sentiment has basically made a 180 from last September. So I remain an ardent bull. And if I go down for the count this time and we go down to 12 or 1,300 and you know, shares just continue to collapse, I'll have to say that word that Fonzie couldn't say. I was wrong, but I'm not there yet.
You know, Peter, is it possible that, you know, both the bulls and the bears can be right simultaneously only because they have a different time perspective? Like someone who has a very, very long-term horizon, yeah, you're bullish. Someone who has a very, very short-term time horizon, maybe that's why they're bearish.
Well, I think it's more than that. I think particularly from the retail end, individuals, is because they don't own a lot of physical gold. They own mining shares in juniors, and juniors seemingly don't go up and gold rises and go down a lot more when it goes down. So they tie the decline in the gold price to their substantial losses that they're witnessing in their junior resource stocks. I mean, that's one thing I think that's clear and evident. But if you just look at price and nothing else, so forget time and price, we were 1530, 1550 when the world was caving in on gold in December, and now as we speak we're 1640 and 1650, and I believe we're every bit as bearish, if not more bearish now. So by price alone, we're bearish more, but the price is $100 higher. And to me, those are all the time things that happen during a mega bull market. And so it's hard to take it, and you can't wave a flag on this particular day, but I believe I'll be able to wave my flag when we go over 2,000 and be really among a true handful of people that stuck through the thick and thin and say, I told you so. And if I'm wrong, I'll make sure that your show was one of the first where Peter says I was wrong.
Okay, so let's move on from gold. Let's talk about silver and other metals. What's on your radar right now with those things?
Again, you know, I'm never a big fan of silver. It seems to PO a few people when I say that. It's still a metal I would own, but I always own gold first. There'll be times when it does outperform gold, but I own gold first and then silver. But again, you know, whereas copper, again, a few weeks ago I heard all about, you know, the Chinese, and we're going on to 3, and we're trading up near 390. Again, not great, but most companies can make money with copper at 390 and zinc at 94, 95 cents, heading for above $1, and silver at $31, $32 is still a nice price compared to what it was just a few years ago. So again, I favor gold first, then silver, and when it comes to base metals, you know, my favorite remains copper, and then right behind that is zinc.
Okay. You know, Peter, over the last couple of weeks, I go to put gasoline in my car, and oh my goodness, I'm assuming because of that, and maybe for other reasons, you're still liking oil, but you're also avoiding natural gas.
Yeah, I mean, you know, I don't like seeing this because I'm seeing firsthand, I'm hearing stories from people who, you know, canceled vacations, struggling with their paychecks because of how much gas is, you know, prices increased. Unfortunately, I don't think there's any relief in sight. All the stuff the politicians talk about, they've been talking about for years. Look, one of the problems is, and it doesn't often get discussed, is, and I can't speak for Canada, I can only speak in the continental U.S., we just haven't been building refineries. In fact, we have refineries closing. And that's one of the reasons we have higher gas prices despite a so-called ample supply of oil. The second is there's a war premium, and maybe the typical American don't want to accept it yet, but I think very, very smart people realize that sooner or later in the Middle East, something's going to have to come to a military head between Israel and Iran. And so there continues to be an oil price built in that could be as high as $30 than where oil may be without such a thing if there was peace on earth. But you can't take that premium away because just the feeling is that, you know, you can wake up tomorrow morning and be facing that. So, yeah, I still like oil. You know, it's going to take a while for natural gas to stay down at these levels before we we wipe out the excess and finally take away some of the expiration dollars that went into it. But there's just too much of an ample supply to even begin to think that there's any dramatic rise for natural gas in any time in the near future.
You know, you got to wonder, there has to be a ceiling somewhere when it comes to gasoline prices, both in Canada and the United States, that there's only so much, it can only go so high, and then it really starts to become economically viable for alternative fuels, whether it's ethanol, natural gas for vehicles, things like that. Have you seen or do you know of any sort of threshold where, okay, whether it's in the States, whether it's, say, $6, $7, $8 a gallon, or in Canada, if it's $1.50 a liter, $2 a liter, have you seen any reports, or do you know where that magical number is, where people really start to go elsewhere?
It's not a number, but how long it would stay at that number. Like everybody has in their head here, and I know what the news media would be like, if just where everywhere you looked in the United States it was $5 or more. I mean, that's going to be the number that triggers political Armageddon for politicians. Okay? I mean, I just know it, and once it's basically $5 or more a gallon in the U.S., it will be. But how long it would have to stay, how bad the economy would have to turn back down before finally people get wise and go, hey, you know what? We got more natural gas, particularly if we realize that our friends in Canada still want to give it to us if we allow these pipelines and stuff.
Absolutely.
Look, and I'm one of them. You know what? I can't drive a Lexus. I got to drive this little car. It has 4 doors. It even has air conditioning, but it's just going to go from point A to point B, and it's going to go on natural gas, and we can do that for the next 200 years without worrying about what's happening in the Middle East.
That's right.
Now, when we get to that point, and I and most other Americans are nowhere near that point, but if we ever get to that point, then the switch will come. Now, it's happening slowly business-wise, and where it's happening, and it may be the groundwork for the next generation, which means I don't think it will be in the next few years, but in the next 10 to 20 years, we're seeing it in the transportation industry. We're seeing widespread usage of both natural gas and electrical cars. It's very hard not to go to a major city in the U.S. and see either the buses or trucking now and so forth and so on, because they live and die so much by the cost of fuel. So maybe that's what needed at first, but eventually Americans their love of cars and cars that are big and not great fuel mileage will get to the point that even the above middle class can't afford to be paying $200 to fill up a gas tank. And we're not there yet, but maybe that's what we'll eventually need to last for 6 to 12 months before we finally say enough is enough, and we got to move away from fossil fuel.
Right. Okay. All right. Well, we've talked about the stock market, gold, silver, oil, natural gas. Let's move on and talk about individual companies. Any individual companies that you'd like to talk about right now?
Oh, where do you start? It's an amazing phenomena in the junior resource market. They never participate anywhere close when the metals are rising, and they just seem to go down a lot more percentage-wise when the metals are declining. And it just seems like it's going to be like that for the rest of our natural lives. I don't know why. I can't explain it anymore. I'm really tired of it explaining, and people are probably tired of hearing me explain it. Having said that, there still is valuations that things get to, and particularly companies who are well past, early-stage drilling have not only identified an ore body, but clearly are developing and soon, rather soon, could be putting it into production or selling it. And there, again, I've probably violated now my own rules about how much money into juniors and all, because I've become so heavily invested these last several weeks. Yes, I've bought and sold, but I own more now junior resource stocks than I've ever had in my life. And, some of them, and again, I'm going to speak my book, but again, it's silliness looking at screens today. I'm looking at Geologic back at 32, 33 cents. In the last 6 months, they've identified their deposit to be bigger and have so much more exploration potential. They're closer to a study coming out that will show their resource being much bigger. Sunridge Gold, a company in the next few months who can see its net asset value of its projects increase multiple times, probably worth already now more than their entire market cap. Spanish Mountain Gold, a company that just a few weeks ago just said, listen, we're going past jail. Don't go to jail and move right to Boardwalk or whatever the big thing was, Monopoly, because they decided to go right from pre-feasibility right into bank of feasibility because that's how great their deposit is, and the stock has been cut half in price. I mean, Orman, again, they just finally released news in the last week or so that, yes, they still are in discussions, and, the stock is, finally bottoming in a level because people realize, oh, well, maybe the news they said in December is true. There is a buyout in the works. But, you can throw a dart. I'm sure other resource followers, newsletter writers have their own favorites. But when you see companies with advanced stage projects or assets that are real and viable and valuable and they're worth more than their current market cap, you're in the ridiculous phase. Can the ridiculous phase last longer? Can it get even more ridiculous before it finally turns? Yes. I mean, I'll tell you the truth. I probably bought, not that I don't tell you the truth, that doesn't sound like a good statement. Can we rewind that, Al?
No. I got you on record.
All right. But, no, seriously, I must have bought in the last, I'm just trying to think out loud. I don't want to say anything wrong because that one person will come up and say, you said such and such. Probably bought close to another 1 million shares of Sunridge Gold between 50 and 60 cents and would have said to my mother, you'll never see it below 50, Mom, in our lifetime. And it traded at 45 cents today before closing at 48. Spanish Mountain Gold, I started buying at 55 because I thought I was stealing it, and today it was printing at 45. So, I'm just a believer that these things are still valuable. There's a great growth in the world. There's going to be many, many more people living in the world needing more and more commodities. And sooner or later, there are more deposits needed, and the people that find most of the deposits are juniors, and that's why I still stay focused there.
Okay, fair enough. Peter, that's it as far as the formal questions. Why don't we just kind of change gears a little bit and get away from business? Anything on your mind, either March Madness, baseball, spring training, the Republican race? You get the last word, parting shots.
Well, let's see. I'm not a basketball fan, and I probably couldn't even tell you who remains in the March Madness. So I'm one of those few people that don't participate in that. I don't look at spring training, and baseball gets serious in September for me. I do like hockey. You've noticed, and I hope, I know I have readers listening to how good I've been. I've lived up to my word. You can't find anything I've written or said since the NHL season started that was negative or even remotely negative about that team in the west corner of Canada. I don't even say their name anymore.
Vancouver Canucks?
Yeah, somewhere's out there, right? So, but I will say this. You brought up politics. Say what you want. The U.S. Congressional Budget Office, which is nonpartisan, came out the other day and showed exactly how bad the current administration's budget plan is, how much more debt, $3.5 trillion more by 2020, and predict all, not just some, all of the major plans, Social Security, Medicare, and even Post Office, will be broke or in a major deficit by 2020 based on the current budget plan of the current administration. So I don't know who's running the Republican campaigns, and if I was them, would not be worried about what Romney said if I'm the other guy, or what Romney should be trying to catch what the other guy said. I just think they should take the Reagan approach from the Jimmy Carter years and just say, this is what Obama said. We know what he factually said. This is where we're at. You want another 4 years of this man. And if 50.1% of Americans still decide that after looking at all of that, then we deserve what we're going to get. But
you know what, Peter? And I know we're really running out of time. I think, as far as the political landscape is concerned, if none of the above was on the ballot, none of the above would win.
Of course. But look, I say it upsets a neighbor of mine because she can't stand Ron Paul's thoughts outside of economics. And I say I would elect Ron Paul right now because if we don't fix the economic part of the equation, none of the other equations are going to matter. That's how high we are financially. But Americans aren't acting like that. Look, they've gone right back to spending. Debt is going back up again. We're watching people more speculative. They're all saying the worst is over in housing. It's like you just don't pay a price. We're one of the biggest obese nations. I'm guilty of it. I'm heavier now than I've ever been, and doctors tell me I should lose weight, but I don't listen because we don't want to listen to that. We want to keep living the way we grew accustomed to. And so, you're right, and there's no great choice at the moment, or that's certainly leaving it all. But I can tell you this administration has moved more towards socialism and secularism than any other Democrat or Republican administration in the last 30, 40 years. And if you like that and you want big government, and you want the thought of the people who are protesting that, the big people have it and we need to take it from them, then this is your man. He's not my man, but if that's what you want, because that's where we're heading. And if for some reason that man gets in again, if you think gold did well now, believe it or not, if you're a big gold bull, another 4 years of Obama it can only help the cause for gold. But we'll save that for discussion closer to November.
Oh, okay. On that note, Peter, as always, thank you very much for your time, and look forward to talking with you again next week.
Yeah, and don't send me that email again like you did earlier.
Oh, the secret's out. Okay. Peter, have a great time, and we'll see you again in 7 days. Okay. This interview appears on my website, corporateinterviews.com. It can also be accessed on YouTube and iTunes. Just type in Grandich in those respective search engines to not only access this interview, but interviews that we've done in the past. Now, if you have any questions for Peter, by all means, send me an email. My email address, very simple, al@corporateinterviews.com. But please keep your question very generic in nature and not company specific. We will certainly do our best to mention it on our next program. For Peter Grandich, I'm Al O'Grady. Thanks very much for joining us.